All right.
But they had the deed of ratification. They've had it for a week and they just asked me for that.
Yeah, doesn't surprise me. Smile.
Yeah.
So we are here live with Deb Smith from Smartline. We are talking about the state of lending today. So we've obviously had an upheaval of all sorts of things in 2020. But prior to that, we also had a banking commission, Royal Commission. We've had a whole lot of changes in your industry. We've had so much, I suppose, going on over the last 18 months to 2 years that it's probably a good thing just to let people know, you know, what's going on, what's available, how easy is it, what are people looking at, or banks looking at rather, to be able to lend. Because I remember you saying that things have gotten tighter in terms of them checking your expenditure and all those sorts of things. So yeah, Deb is a really valuable resource, just a, you know, font of knowledge, and has won so many awards as a broker as well because she really cares about what she does. So yeah, it's a pleasure to have her on and be able to share the information that she's got with you all. So for those of you who are seeing this live, you've got the benefit of being able to ask us questions as well. So if you're on Zoom live, you've got a Q&A button or a chat button, so you can access both of those. And I can try and see what pops up on Facebook too. So we'll just see how we go.
Cool.
All right. Deb, hi, how are you?
Hi, I'm good. So it's funny, you know, hearing that introduction, because so much has changed. I actually don't even know where to start to tell you, and it continues to change every day. And it feels like the Royal Commission was 10 years ago now, because I reckon we've had 3 billion changes since that happened. So, and of course, we're now living in the world of COVID, and that's brought a whole new set of challenges and changes too. So pick my brain as we go, because there's probably some stuff that I'll leave out. Let's talk about today in COVID world. And what that looks like, because there's some specific stuff with that. And of course, you know, the government has done their helpful talking to the banks to get them to allow people to put home loans on hold, pay interest only for a period of time, stop paying your mortgage for a period of time. And they assured us that by doing that, that would not hinder your chances of refinancing your loan or doing anything with your loan in the future. And I believed them. Why wouldn't you? Until I had an application that got knocked back yesterday as a result of it. So that's an interesting challenge that I've actually gone back and now had, and I will fight that one, because that's not cool. So I think that, you know, yes, there are people that are impacted, absolutely, and there are people that absolutely need that assistance. I think what you have to understand is that if you're going to refinance or you want to borrow money, banks want 6 months of clean conduct. And that means paying your loan as it should be on time, paying your credit cards on time, paying your bills on time, basically. Yeah. So you need to think really carefully about how much you need it. Because I have spoken to clients that have phoned me and said, oh, I'm just going to put my loan on hold. And I'm like, well, hang on a sec, you've got $30,000 sitting in an offset account. You need to use that. That's what that's for now. So I think they're like, well, that's my savings, but what does the future look like, and how important are those savings if it's going to damage your credit for what you want to do in the future? And if you're not going to do anything, big deal. But often things come up that we don't necessarily plan to do, and that's where people get caught out. So,
great tip.
The second part of that then, of course, is JobKeeper. And there are lots of people that are on JobKeeper who thought that they might like to buy a house. Right. And banks don't like JobKeeper.
No.
So what they're actually looking at is you might get paid JobKeeper, and whatever that is, $1,500 a fortnight, I think it is.
For now, yep.
However, if you're not actually working to get that money, they won't use it.
Yep. Oh, how interesting. How do they prove if you're working or not? Yeah, I suppose you declare it.
It actually comes up on people's pay slips. So there's, it will say however many hours at whatever rate, and then there's a JobKeeper top up.
Right.
So yeah, they have to actually put it down on a payslip. So it's pretty damn obvious once we look at a payslip. So that's, you know, something to be aware of as well. Now, the positive side of the Corona joy is that there have been some amazing advantages if you would like to go and build a house or renovate a house. And that is the home builder grant.
Yeah.
And that's just been extended, which is fantastic. So simply for those that don't know what that is, if you build a brand new home and sign a contract between now and December 31, so 2020, and you start building that home, it was within 3 months, but that has now been extended to 6 months, you qualify for $25,000. Now, there are some rules around that, and there's some earning capacity rules, there's valuation of the property, so there's a few bits and bobs behind it. But for most people, if this is your first home, and I think you need to spend under $750 combined land and build. Don't hold me to that. I think it's $750. That's pretty realistic for most people building their first home. So, and then if they're building in a regional area, they're going to get $20,000 for their first homeowners grant to build. We've now got 45 grand. And in addition to that, they're not paying any stamp duty on their land. So we're talking $50,000. Bring it on.
Yeah. No, that's great.
Amazing.
Particularly for areas, you know, just outside the outskirts of Melbourne, like Wallen.
Exactly right. So that's an amazing incentive. Where I'm struggling a little bit for some of my clients on that is they still have to have 5% genuine savings of the cost of the property. So you still have to have some savings. You don't just get the cash and, you know.
Just the land or the whole house and land package?
The whole thing.
Yeah.
Yeah, the whole thing.
Yep.
So, but still, for those that have been saving and they weren't quite there, this has been enough just to kick them over and make it a pretty nice deal for them and avoid a fair bit of lender's mortgage insurance as a result of it. So, so that's one of the really positive things. The other thing is also with that home builder, it doesn't have to be a build. It can be a major renovation, but that does need to be through a builder. And same criteria. It's got to be more than 150,000, an extension. So it's got to be an improvement to your house. And that's not a swimming pool. That's like an extension.
Yeah. It has to be 150,000, like you said. A swimming pool's not that.
No, that's right. You could probably build a pretty mean one for that. But,
probably could.
You know, undercover, you know,
heated. Yeah.
Bring it on. So yeah, they're definitely there. But again, there's valuation rules around what the value of your house can be at the end. There's earning rules in terms of how much you can earn for that. So there's a bit to understand behind that. But they are two terrific things that have come out of it. If you have a job and you're not on JobKeeper and, you know, kind of life is normal and you haven't been affected too much. So that's kind of what's going on with the COVID world. In terms of like pulling back from a lending perspective, I don't think that's changed from a COVID perspective. I think we're just living from the Royal Commission and the changes that were made there. And you spoke about living expenses. That's been a real focus, and look, not a bad thing to focus on. And, you know, the banks talk about responsible lending, and that is responsible lending effectively. If they're your living expenses and that's your cost to live, then that's your cost to live. So if that affects what you can borrow, reduce your cost to live and show me 3 or 4 months of statements living like that. And then we can look at a different borrowing amount. So that definitely has had to know.
So you reckon 3 or 4 months, and with genuine savings, how do you prove that it's genuine? Like if it's sitting there as a lump sum for 6 months, or do you actually have to show that you contributed to that no matter how long it's been there?
Well, so the rule, the rule is it has to be in a bank account for 3 months.
Okay.
Okay. Now, remember though, when the bank asks to see your bank account, they ask for a statement of transaction report. And if you're on a 6-month statement cycle and your mum and dad have put in $10,000 by 3 and you've got 30,000, they're going to want to know what that is.
Yeah.
So yes, that's the rule, but the ideal world is show progressive savings and show that it's been sitting there for 3 months. I mean, effectively what the bank are looking for is to see that you can actually save money. Now for some banks, they will look at rent as genuine savings, right? If you're paying $1,500 a month in rent, then we can see that you can consistently pay something off. And that is what they're looking for.
Okay.
So it's really about understanding from the bank's point of view, the method to their madness around why they want to see what they want to see, and then deliver it in the way that they would like to see it.
Okay. All
Yeah.
right. Good, good. And just, I suppose, from the perspective of the property market, you were certainly flat out until you said like about a week ago. And I suppose that's continuing, isn't it? Like there doesn't seem to have been too much of a dip as yet.
No, I think there's a couple things. I mean, certainly the first home buyers are going berserko because of that home builder grant. So that's made me extremely busy. And I think when that first wave came in March, things went quiet for a week, and then everyone went, oh yeah, business as usual, we'll continue. And it went nuts again.
Yeah. Okay.
So it was nice to have a week to catch my breath. But I think also what we have to remember is we have a massive shortage of properties. And so as soon as something comes on the market, it just gets snaffled in 5 minutes.
Yeah.
And they're still getting great prices because there's just no competition.
Demand.
Yeah. So, and that hasn't changed. Now, when this lockdown got announced again, I did have another little quiet spell, which was my little catch-up time, and now it's gone silly again. So I think that there's that initial,
Uncertainty. Yep.
Yeah. And then after a week, they go, oh, yeah, okay, well, business as usual. I haven't been affected. I'm okay. And the other thing is a lot of people are working from home. So they've got probably, maybe they shouldn't have a little more time, but they seem to.
Yes. Where do they get this time from?
Travel time.
Right. Yes.
So I suppose because they're at home and no one's watching over their shoulder, maybe, I don't know, but they are revisiting loans. And so for those that do have loans in place currently, refinancing is certainly very busy at the moment because the rates are just incredible. And, you know, I'm seeing fixed rates as low as, 2.19. I got a variable rate for someone with an offset the other day at 2.3, which is just unbelievable. So if you've got good equity in your house, my God, there are some amazing rates out there at the moment. And we're not just talking, $100 a month. Yep. For some people, they're saving $500, $600, $700 a month in repayments, which is just incredible. So even if you're extending their loan term to 30 years to make it service, and you whack on that extra money and they keep repaying what they are repaying, they will end up being ahead and saving themselves a hell of a lot of money.
Yeah. Okay.
So certainly, if you haven't revisited your loan, then you're mad not to.
Now's the time. Yeah. Yeah.
Absolutely. And the banks are very much open for business. I'm not having a problem getting loans approved if they're a strong application today versus 2 years ago. It's the same. I mean, the appetite is still there, so they're definitely open for business. And
Excellent.
those rates are certainly attracting plenty of business. So some great deals out there at the moment. And I think the other thing probably that's making things a little complicated for the average punter today is that the rules are changing every day at the moment. To the point where as a broker, like it's just boggling our brains, like we actually can't keep up with the change at the moment. So though they are trying to make our life a little easier with being able to do a Zoom call and ID someone online and not have to see you in person and things like that, which we've had to historically, which is great, with that comes a whole lot of change in policy. And of course, because everyone's doing everything electronically, there's now a real issue with fraud as well. So we are having to do things a little bit differently, and the banks certainly have different appetites for different bits of business at the moment. So I kind of feel like I'm thanking them a little bit for that, even though it's making my life hard. It's actually making the average punter's life even harder, which makes a broker more important than ever to be able to help
you through. Yeah, absolutely. Well, it's interesting that, they're having those potential fraud issues, and I suppose the ID checks, it might almost be bringing the banks up to the standard where Land Victoria got about 12 months ago when they went online. And luckily they did when they did, because we've been doing verification of IDs now. And it makes it harder, particularly for people who haven't got a birth certificate. They've just got an extract, or they no longer have a driver's license or whatever. But that's the whole new world, isn't it?
Yeah, I think from an ID perspective, they were certainly, we can't use extracts and any of that stuff. We haven't been able to, since I've been a broker. But physically we had to cite that ID. That was the difference before. Now they're letting us physically cite it, online together.
Virtually.
And there's some of them that have actually got apps where I physically cite it online.
Yep.
Then I fill it all out on an app. Then I send it to them. They then have to authorize that that's them. They have to take selfies with their ID. They're pretty funny to watch.
Yes.
And there's that another level, which, to be honest, isn't a bad thing. I just wish the banks all had the same process. Where it's challenging for us is everyone does it differently. So, but yeah, look, I mean, none of that hurts. I mean, it's only going to help everyone and get better outcomes for everyone. So, they have been very accommodating because at the end of the day, they're not going to get business if they don't accommodate us a little bit to
That's
help
right.
them.
Yeah. All right. What about our commercial friends? Where are we at with some commercial lending? Because we also had a whole lot of promises with the government guaranteeing loans and all of that too, didn't we?
Yeah, I haven't actually done a lot of commercial in the last few months from a corona perspective, but they have certainly, from what I understand, opened their wallets, so to speak.
Yeah.
I think it's one thing for the government to put that pressure on and tell the banks to do that. But at the end of the day, they've still got to be comfortable and responsible that the money's going to get paid back. So I don't think it's being handed out like lollies.
Yeah.
But what has changed in commercial lending in the last sort of 12 to 18 months is when you borrowed from a business perspective, you just had to provide all your business financials. Or there are a lot of low doc loans that you could do and not even have to provide evidence of tax returns and BAS statements and those sorts of things. That party's well over. And they're not just looking at your business financials now, they're looking at all your personal financials as well. So getting a commercial loan is harder than it's ever been because they're now looking at everything residential and business, whereas before it was just your business. So yeah, I certainly know I've got a few clients that I have done commercial loans for that have gone, this is just ridiculous, the amount they're asking, but it's like another residential loan plus.
Yeah. I had the same feeling that I haven't seen many people going for that commercial lending under the COVID scenario, and it doesn't surprise me that you haven't had much of it either. It makes me wonder as well about a whole lot of businesses and their recovery. But time will tell.
Well, and this is the thing. I mean, how far in debt do you want to go into? Because at the end of the day, you've got to pay it back.
Yes. But people are also, I suppose, in a way going into debt by not paying their lease potentially as well while they've got the premises. They still have to pay that back eventually. So it's not going away. So cash flow is going to be an ongoing problem for a long time, isn't it?
Yeah, I agree. And I know even my accountant rang me when this first happened and, he kind of flagged that my industry it could be quite volatile. I mean, fortunately it hasn't been, but it certainly had potential to be. And one of the things he said to me is, I used to pay every month, I'd just transfer money straight to the ATO, to cover BAS and PAYG installments and all of those things. And he said, stop it.
Yeah.
Just put them into a bank account because they're not going to chase you and you've got some cash flow. And that was actually really good advice because there's a fair bit of money that gets transferred to BAS and PAYG installments. So, I've been grateful for that advice that, now I'm in a position where I'm about to have to pay all of that, but that's okay. I've got the money sitting there and I haven't touched it. So, but I would have had access if I needed to. So I think that, that's the key. I think what I found really interesting during these times is I thought logically, stupid me, that when we go into a state that we're in at the moment, that people would start pulling their heads in with their spending. And even the people that have still got jobs would be more concerned, I suppose, around there's a chance they could lose their job. So therefore, we're going to stop spending. People haven't changed their behaviour. And I find that really interesting. Where they're saving money is going out to dinner, which is a big cost for most people every month. Incredible cost for people every month when you start looking at people's bank statements. So that's stopped, but they're still getting Uber Eats and they're still getting takeaways and they're still doing online shopping. And so to me, logically, I kind of thought everyone will just kind of stop that a bit, batten down the hatches a bit so they've got a bit of savings, But I find it incredible that people haven't done that, because right now I just think you should be saving every cent you can, because we don't know what the future looks like. And if you are one of those people that is unfortunate to be affected and a job loss happens, at least then you've got a little bit of backup money saved.
Yeah.
And human behavior, unfortunately, if we've got money in our pocket, it seems to burn a hole and we like to spend it. So yeah, I'm certainly saying to my clients, just batten down the hatches a bit. You just don't know what the future looks like.
Yeah. No, it's very uncertain, isn't it? So far, so good in many ways. But as you say, like, if this keeps getting extended, or we have another wave, or who knows, like New Zealand's just gone back into second lockdown as well, and we thought they were fine. So, all right. And then SMSF, the bane of our existence.
So look, SMSF still ticks along. There's a lot less lenders doing it now than there were previously. And the big banks have stopped doing that now. So they're kind of a specialist product now. But look, they're still there. They're just ticking along. They're just an arduous process, but certainly can be done and are being done.
Okay.
Yeah.
Very good.
Does that cover, you think?
Look, I think so. We had a couple of people hang in there until we started talking commercial. And sorry for anyone who's watching live on Facebook, but I can't actually see it on Facebook to be able to see if you're commenting or anything. I'm trying to find it, but it's coming up with a thing saying it's not available while I'm doing what I'm doing. So
technology.
Yeah, the joys. So if you do leave a comment or you have a question, by all means, leave it in the feed in Facebook. I will see that as a message and a comment on our page. I'll email and direct anything over to Deb anyway, or direct message via Facebook if it's something private. And I'll tag Deb as well in this post once we finish live, so that you have her contact details as well to be able to get in contact with Deb.
Thank you.
Anything else? Where else can people find you?
Smartline.com.au/DebS is probably the best way to find me. Or just Google Deb Smith, mortgage broker Wallen. I do work across all of Melbourne and have clients all around the nation. So don't be
phased by the location. No, I think we're all learning that location doesn't matter these days.
Doesn't matter. It's just convenient to my house, and that's the only reason I'm here. So reach out. I think there's plenty of frustrated people out there that aren't getting what they want, and it's important to work with a broker that's solution focused, which is what I am. And if there is a solution, you do have to work hard to find them sometimes. So it is important to work with someone that's willing to put in the effort rather than pop you in the too hard basket. So don't always take no for an answer. But yeah, I do encourage everyone that's got a loan out there now, please review it if you haven't. My goodness, there's amazing savings to be made.
Yeah, fantastic. All right.
Thank you.
Thank you very much for your time, Deb.
Always good to chat.